Alright, I'm going to try my first attempt at a live stream. 3:44 p.m. Monday, March 15th. I've got my TD Ameritrade broker open here. See, we've got the flexible grid option open. You can switch between having an individual chart or this flexible grid where you can customize. Here I'm showing two charts. I'm showing the NASDAQ indice and the S&P 500, and these are the futures, both showing bullish uptrends. This is a 3-year 1 week chart, so it's a zoomed out picture. So when people are panicking or kind of confused at where the market is still fairly high. I'm pointing at the NASDAQ here. Our last severe pullback was last March, so this was when the pandemic started. I can zoom in a little, and that was the first real sell-off. Since then we've gone up and up and up past previous highs and just gone up and up and up. Can switch to like a 6-month chart, which is a little easier to look at. This is the sell-off that we've seen in the tech recently. It's basically more or less a correction more than a sell-off. As you can see, it's just kind of tested the 180-day moving average, if anything. So there's still a lot farther. If you zoom farther out to where I was initially with a 3-year chart, we could drop quite a bit farther and still be at previous all-time highs before the pandemic. So I've got some orders going through right now on the corner of the screen, some limit buys I had set, so we'll check those out. It was for SQQ, which is the inverse NASDAQ. So what I'm doing there is I'm hedging myself against the NASDAQ, which is kind of, people are wondering if it's going to go up anymore, or it's hard to tell really. So you can see SQQQ does the opposite of the NASDAQ, so that it looks very oversold because the NASDAQ is overbought, and it does the inverse. So zoomed out, it is very low. So the reason I'm picking some up here is to protect myself against further correction in the NASDAQ. Let's see, you can see anyways I have a couple more limit buys that haven't gone through yet. They're set here. My orders will show up down here in this level 2 information. My buys are down here at 1349 and 1350. I set a couple low ones at the lower end of its range that's been trading. Here's a 6-month chart, so you can see it's been in a downtrend as the NASDAQ's been in an uptrend, and as the NASDAQ has started to sell off, this starts to go up as it's the inverse. The last real scare a couple weeks ago with the NASDAQ, this had spiked up. Now it's coming back down to a common level, so I'm starting to pick it up here, just as a hedge again for my account. So if you guys were thinking about hedging yourself with either keeping cash in your account, keeping gold, crypto, this is another option, is using SQQQ. It's an ETF that does the inverse of the NASDAQ. So that's enough on that. I'll show you something that I traded quite a bit today. RIDE is a ticker symbol. They're a SPAC who's going to be merging with Lordstown Motors. So you zoom out this chart. What do we have? 1 year, 1 day chart. So this is showing a picture of the last year of trading. I'm going to zoom in and just get this picture here, and each candle is 1 day. So the reason I started buying down here is pretty clear. It's showing a trend where it's really kind of bounced off this 180-day moving average. It fell below it here, and what happened, this sell-off right here is there was a short report. Basically they're claiming, there's a firm that's claiming these guys are a fraud company basically. It happens a lot in the market. and then short sellers will make money. They'll have their time bringing the stock down. We've got a news area down here, so that would show you that. But just this morning we had Lordstown Motors to refute report from short seller in coming days, so that's a catalyst for this ticker. The fact that they will be refuting the report, I mean, they haven't yet. They said they, obviously they aren't a fraud company, so that will be interesting to see where that goes. Again, I was trading it today. Zoom out. So it looks pretty good. This yellow line is my price, so I feel pretty safe with my position. It looks like it's pretty supported where I'm at, and that's the reason I'm there. So I don't have many shares left, to be honest. I've got 25 shares. At one point today I had over 400, and my price was closer up to here. So as this kind of has been getting rips, I've been selling my shares, which will lower my average price. You want to get it down farther as far as you can, and at the same time, as I'm selling shares, if this thing does pull back and correct, I don't have as much skin in the game to hurt me. I don't have money on the line as much. I'm actually hoping for it to correct back down, and then I will load back up with some more shares. So it's all about it depends if you're a trader or an investor. I'm kind of both. But if I have the opportunity to capitalize on swings, if I can buy dips, sell the rips, it's lowering my price. Overall, by the end of the day, you kind of take your money back. If anything, this thing can keep running to the moon. I'll make some money as I still am holding here. If it pulls back down, well, I'm not as worried because I don't have 400 shares anymore. I only have 25. So I'm actually hoping for it to come back down. Long story short. Go back to a 6-month chart, and this thing looks like a beautiful setup. So I'm not going to sell all my shares. I want to keep some shares, 25, but at the same time, we'll zoom in here. There's no reason that this might just pull back down closer to my price and I can reload. So I'll keep some shares for maybe the ride up, and at the same time save money just in case. So never go all in on one thing. I could show you guys GIK. It's another SPAC that's going to be merging with Lightning eMotors, which is going to be an EV provider. Supposedly they've got contracts with Amazon and a few other big companies. Let's see. So my price on this one is this dotted yellow line. I started to buy this dip, kind of fell a little more. Right now it's showing like it wants to break out, but I never just go all in. I've actually been kind of selling this one today too, selling at these prices, anticipating it to correct again, and then I can buy some more. If it keeps going, well, I still have a position. If it doesn't, I don't have as many shares for me to get hurt by it coming back down, is basically what I'm trying to say. So we can zoom into a 1-day chart, and this thing's actually gapping up as I'm making this video. So let's see. And we've got some more orders going through. I'm buying more SQQ, so I do know that I'm holding about, I want to say 50 shares still. Let's see, yeah, 50 shares still. I've got let's see, I mean, not a lot. I've mostly taken most of my profits. I've only got like $40 on the table of profits. I'm just gonna leave those 50 shares in there, because you zoom out again to it's still, you want to keep 50 shares in there, but at the same time I don't want 1,000 shares, because this thing could just as easy pull back. So you kind of keep some skin in the game and not too much. Kind of be smart, because this market, these names, they may look like good setups, but they're also going to travel with the overall market. So go back to the overall market. We do look bullish right now, but at the same time we could substantially pull back quite a bit. Guys don't realize this was the last severe sell-off, so we are still quite a bit higher on both indexes. We could fall back to these levels. This would be a severe crash, just like when, I'm not saying that, but this is very likely, and very realistic, and it would be good for the markets, to be honest. So I'm just watching for that. And like I said, at the beginning of the video, you guys could play that by buying inverse ETFs. The SQQQ will help hedge your account. I'll just show it one more time. SQQQ. So I mean, the chart looks terrible because it does the inverse of the NASDAQ, and the NASDAQ's gone up. Well, as the NASDAQ goes down, this will go up. So I've just started a small position down here in the low 13s. I've been buying it as this video has been filming. I had some limit buy orders that have been going through. You look at the 1-day chart and it's dumping right now. So what does that mean? That means that the NASDAQ is ripping. So go to a 1-day chart on the NASDAQ. Well, look at that. The NASDAQ is ripping right now, ripping up. Go back to the inverse. That's ripping down. So if you think that this is, you know, the NASDAQ's going to keep going up and up and up, well, maybe you'd want to wait on this. Zoom out to like a 5-day chart. Zoom out a little farther to a 10-day. Where's our next support is down here, maybe even down like 1330s, and that kind of looks like where we're headed right now. So you could be patient and you could wait to load some SQQQ, and that would probably line up with some resistance on the NASDAQ too. We'll zoom out on the NASDAQ, go to a 20-day. The NASDAQ is about to run into prior resistance right here. So it could just kind of bounce and go down, and then your SQQ would go up. So you can play it both ways. You just want to kind of watch and go back and forth. That's just for the overall market. As far as individual stocks, I showed you guys GIK, which is a SPAC about to merge into Lightning eMotors. I'll put it back on charts though. So that was GIK. There'll be Lightning eMotors. Go back to a 1-year chart. Still pretty good if you're not in it. My price is the yellow one, so I'm letting what I have ride. It's not a lot. If it goes up, great. If it goes down, I'll buy a bunch more. I showed you Ride, same scenario. It's going to be an EV company. Right now they're pre-merger, they're still the SPAC, so you know, the 1-year chart looks like a great setup. Pretty common trend. We're back down here at prior support levels, so I started building position. That's my position there. Again, not a lot of shares. I don't care if it goes down farther. I'll buy more. If it goes up, great. I do have some shares. These you know, blue bars in the background, this is volume, guys. You do want to pay attention to that because the volume is picking up right here in this candle. This is the price action of that candle, which we're on a day chart, so this was 1 day price action, but you see the volume, and that's what you want to wait. Usually stocks will reverse once volume comes in. So no volume, it's kind of selling off on low volume. All of a sudden you find some buyers here, so they must have liked this price, which caught my attention, and I'm in at a pretty good price too. So I wanted to show you guys that. Before I wrap up the video, we've got 3 more minutes before the market close. I'll show you guys a couple more, a couple cheaper SPAC plays, which was one reason I was doing this video. So one of them I could show you would be SEAH. They're going to be supposedly merging with a sports/entertainment company, which sports betting is going to be getting pretty big. So with SPACs, the floor is $10, which would be a guaranteed price. If anything happens with the company, or it doesn't find a company to acquire, that's your guaranteed floor that you'll get. So with this trading under 10, it actually doesn't really make a lot of sense for me why these would go lower than 10. You know, if you're looking at something that might not be a quick mover but a pretty safe investment, these SPACs near $10 is a pretty good deal. And again, this one's going into sports entertainment, so you find out what they're hoping to merge with for a company as far as a sector. If you like that sector, like it's in fintech, you know, EVs, this is going to be in sports gambling, then you might want to get in if they're close to these levels. And this one's under 10 right now. You see some orders coming through. People are buying it at $9.98, so I'm trying to call this out while it's under $10 for you guys. Another one, SOAC, Sustainable Opportunities. They want to merge into a sustainable company. Let's see, I do have a notepad right here. Let's see what I wrote down. Okay, the company they want to merge with is Deep Green Metals, which is going to be a mineral mining play, actually in the ocean. I mean, that's their name, Deep Green Metals. So right now we're under, great setup. We're under the $10, the guaranteed pricing. We're actually a little over it. These are the orders coming through, but still I'm trying to call it out near the $10 for you guys. SVAC, we'll do that one real quick. It's another SPAC. Again, 10.08. We're right near that NAV pricing. Beautiful setup. We've had one rip up to 13 and pulled back down. All the SPACs have been kind of gotten beat up worse than anything else. That little scare we had in the market a couple weeks ago, the SPACs took the brunt of it. So there's a lot of opportunities. And there's the bell. So the market is closed. So the market just closed on us. Let's see. So I will wrap this video up for you guys. I'll show you. Well, actually, this was the last SPAC I wanted to show you, the SVAC. They're going to be merging with Cyxtera Technologies, which is a data center play. Supposedly they've got dozens and dozens of data centers around the world, guys. So they're global, and that seems like a future-proof company. So I gave you a couple SPAC plays. And I did a little bit of charting with you guys. I'll show you one of my biggest positions. Well, this is my biggest position, Clover Health. It's kind of messy right now because I have some limit orders set automatically to sell, obviously, so they're being displayed on my chart. Also, we've got my buy price here, which isn't the best price, but I've been selling covered calls on the position, kind of hedging myself, so I'm not too worried either way. This can do, it can go back down. I can buy back my covered call contracts, or it can go up and I can start to get out of my position. So either way, I've kind of hedged myself on Clover Health. If you guys aren't in Clover Health, it's still a decent deal. You can see we kind of bottomed near the 631 was the actual low. It mostly traded near the low 7s though, and now we've busted back up, trying to bust through the 50-day moving average, which we have. Now it's kind of consolidating a little. We're starting to see some doji candles, which is a sign that it's going to change direction. We don't really know which way, but either way, if you weren't in, it'd still be a good price, or you could just kind of watch it and try to get a better deal. But they've recently had some news coverage, so we go to our news down here. Let's see, analyst actions. Credit Suisse initiates coverage with a $10 price target. That's the lowest one I've seen. That's only $1.20 from where they're at now. There's a lot more. I've noticed they like to hide the good news on this company, which is ironic, and they like to show the bad news of the company, hence probably why it's been performing so low. But I know the average price target is anywhere from $15 to $17, which still would give you about 100% gain. So that's my largest position. That is a SPAC too, but they have already merged with their company. So that's Clover. I guess really quickly I'll show you DPW. This is a play that I'm in. I don't know a ton about it, but I know that they're into crypto mining. You can see they rocketed up from lower than this level, $1.80s, right up to 11, and since then they've kind of been consolidating, but they see these big spikes. So I tried to catch it. I think I paid $3.85, so I'm closer down to this 50-day. We fell below the 180, and now we're kind of consolidating at the 50, and that's where I'm kind of getting in. I don't have a large position. I think a couple hundred shares, but if you zoom out to like a 1 year, this looks like potential. It's definitely a gapper. So down here near the 180-day, if you guys could be patient and buy it somewhere down in here, or maybe get in now, but either way. So that's DPW trading right now under $4. I think that is about it. NXTD is a cheap crypto play too. You can see it was basically going along, so you guys want to be careful with these. They're very volatile. It rocketed up, consolidated, probably a bunch of people trapped, rocketed up, same thing. So kind of consolidating, some doji candles. So it could just easily bounce all the way down to 80 cents, which from here would be you losing half of your investment, or it could spike all the way to 3 and W. So just something to keep an eye on. They're very volatile. So we covered the SQQ, some SPACs, a couple mining plays. I think that's about what I'm in for positions. I got out of AHT today. If you guys weren't in AHT, this is a good play. This chart looks they're a REIT that covers high-end hotels, which have taken a beating over the last few years, mostly from the pandemic. But as we're getting down here, it's kind of consolidated and just gone sideways for a while here. If you zoom into a 180-day chart, it's been kind of trapped in a range here. It had finally gotten to a low of $1.27, and I'm not sure what caused it to spike up, but in a matter of days it shot up from $1.27 to $7, which caught my eyes, and it's been trapped in this range ever since. And that's a previous price I had it, which was a great price, but still it's been respecting that 180-day moving average. Bounced up again. To be honest, I could see it probably correcting again down to maybe like the mid twos before maybe going higher. But something you can keep an eye on if you want to play reopening play that covers high-end hotels, and one that could possibly double, triple, quadruple your money. Looking at a 3-year chart and where it's been over $80 and now being under $4. So I hope you maybe learned something at how I look at charts and value companies, switching through time frames. Maybe you got a couple ideas with the SPAC plays, and I hope you enjoyed the video and everything came through all right. This is my first attempt, so there'll be many more, and I appreciate